Welcome back to Morning Markets on Thursday, the 13th of April. Headline inflation in the US was reported at 5% yesterday for the 12 months to the end of March. In today's show, we'll explain what this means for you as the investor. So headline inflation reported at 5% in the 12 months to the end of March. Why is this important? Well, this is the 9th consecutive month which we've seen the annual headline inflation print decline, coming down from the summer highs of 9.1%, which we saw last year. The key aspects which are supporting this cooling of inflation are base effects, and essentially what we mean by that is in March of last year, inflation was running at a rate of 8.5%. So we're comparing the annual price change from a higher starting point. There's also energy within there. So energy as a basket fell 6.4%. But if we break this down, gasoline prices were down 17.4% and oil prices down 14.2%. But on the other side, you had electricity prices, which were up 10%, and natural gas prices, which were up around 5.5%. The challenge for the Federal Reserve at this point in time continues to be core inflation. And what we mean by core inflation is headline stripping out food and energy costs at this point in time. Core inflation was reported at 5.6%, and that's ticking up from 5.5%, which was printed in February, and it's up 0.4% through the course of the month. So while you've got headline coming down, you've got those stickier core components which are still pushing higher. And the areas which are putting that upward pressure on the core inflation print include shelter, so housing costs. They represent around 30% of the inflation basket. They were up 0.6% over the course of the month and 8.2% over the course of the year. And these core components tend to be stickier. Once you see housing costs rise, it's often harder and takes longer for them to come back down. In the 12 months to the end of March 2023, we've seen 4.5% worth of interest rate hikes come through from the Federal Reserve to try and increase financing costs and ultimately cool inflationary demand down. But where do we go from here? Well, whilst inflation is coming down at a headline level, we've still got those upward pressures in the core aspect. The Federal Reserve potentially have more work to do. And at this point in time, the market is debating whether they've got another 0.25 or even a 0.5% increase left in the tank for May before they start to trim back interest rates, which the market expects to be towards the back end of 2023 and into 2024. Following the announcement, 2-year Treasury bonds, which are more sensitive to interest rate expectations, fell quite dramatically. They were down around 13 basis points, which is positive for returns, but gave some of that back through the course of the day, finishing down around 6 basis points. And given the strength of the pound relative to the dollar, equities were down in sterling terms. There's also an aspect within the equity markets of the fact that yesterday we had the release of the Federal Reserve minutes, which were from the March meeting, at a time when there was a lot of focus around what we were seeing within the regional banks in the US. So just bringing that back to the fore. In tomorrow's Morning Markets, we'll bring you up to date on a number of the developments which we're seeing in respect of the UK. So please do tune in. Thank you for watching.